Pepsi stock ticker symbol PEP is down almost 18% in the past year. They are reporting earnings next week on July 17th, and in this video, I am going to do an in-depth analysis of the company by looking at the financials, the forecast, some important statistics, using my intrinsic value calculator to determine future returns if we invest in Pepsi at today's price, as well as revealing whether I'm adding it to the YouTube stock portfolio challenge. This is a very popular stock in the dividend community because their dividend yield is 4.22% or $5.69 per share. However, I want to say that the payout ratio is very high. The payout ratio is what percentage of their net income is used to pay their dividend, and as you can see, it is 80%. So if net income struggles in the next quarter, this dividend yield is gonna go lower. If we now take a look at their financials, their revenue was growing in 2020 to 2023, but over the past 3 years, their revenue has basically been flat and seen no growth. If we take a look at their profit, net income was also growing until 2023 and hasn't really grown in the past 3 years. The same with free cash flow. As you can see, it has been around $7 billion over the past 5 years. So this is not a growth stock. Also, their margins have been at around 10% regarding profit margin, and free cash flow margin is a bit lower and has been around 8% over the past 5 years. If we then look at what's expected for the future of this company, revenue growth is expected to be between 1 and 3% over the next 3 years, and EPS is expected to reach $8.97 per share in 2027. So again, not a lot of growth expected for this company. If we then take a look at some important statistics, first of all, the balance sheet is not really great as they have $8 billion in cash and $48 billion in debt. Now, this is some debt for a company that has a market cap of $184 billion. So again, we need to be a little bit careful about this, but this is a very large company, so I don't think they're going to have problems regarding this. Then, if we take a look at some ratios, the PE is 19, the forward PE is 16, and the price to free cash flow is 25, because as we have seen, their free cash flow is a bit lower than net income. So it doesn't really seem too expensive, but it doesn't seem also cheap for a company that has not a lot of growth. So in order to take a deeper look at the valuation, I use my Google Sheet. This tells me at what price you should buy a stock based on the assumptions about the future of the company that you put in. I did a 7-year analysis with a low case, middle case, and high case. According to my low case, the intrinsic value is $55 per share. The middle one, 89, and the high, 134, which is what the stock is currently trading at. So only according to my high assumptions, you would get a market return. So it doesn't seem very good. Also, this means that according to my low case, you would get a negative 5.1% annual return on your money. Middle, 2.8%, and high, a 10%. So not a lot of returns according to the intrinsic value calculator. And again, these returns include the dividend because, as I have said before, dividends come from net income or free cash flow, so we cannot double count them. If you want access to the spreadsheet, I'll leave a link in the description below. It's very simple to use because all the calculations are done on sheet 2, so the only thing you need to do is move these numbers around. Then, in terms of whether I am adding it or not to the YouTube stock portfolio, the answer is no, as I like to invest in companies that I believe are heavily discounted, such as Alibaba, as you can see here, PayPal, Walgreens, and SoFi. The best one performing so far is SoFi with a return of 177%. And Pepsi, in my opinion, has a lot of issues. First of all, the dividend yield is too high compared to the net income, and the valuation seems expensive. Moreover, their balance sheet has some debt, which is something to take into account. This is why, although Pepsi is down 30% from its all-time high, I still believe the stock is quite expensive, and I am personally interested in less than $100 per share. Is this video valuable? Let me know what you think about Pepsi stock in the comments, and I'll see you in the next one.